I've seen some person's analysis, and sometimes I wonder, but let's not go let's not go let's not go deep. So let me share my screen. So can you guys see my screen?
Yes, I can.
All right, bosses. That's no problem. So um back to the chat. Just being on back for a week now.
I can.
You can see my screen, right?
Yes, I can.
Okay, sharp. I like that. So first of all, one thing about SMC is SMC trading strategy is all about discipline and patience. That's what most people don't understand. You see somebody, you see how would I put it now? You come on, you see, so let me use somebody like who will I use now? Let me use Tony Ike for an instance. Tony Ike comes on TikTok or on Twitter. Now he's even less on TikTok, he's now more on Twitter. So if he goes to Twitter and posts his wins and blah, and a lot of persons keep imagining how does this guy do this thing? The truth is you can do it times 10. The thing is, SMC people just I do laugh at times. So I do imagine at times when I see the way some persons treat SMC. SMC is not just an ordinary, how do I put it? SMC is not just an ordinary trading strategy. It is a trading strategy that helps you trade like the banks. So you just treating it as okay, this is zone. Price will come to this zone. Let's play. Do you know there are criteria to that zone that once you don't see it, and the most mistakes I see is, and the market shows you that you did your directional bias, and market shows you bullish. I think it's very very common. I'll still show you. I'll show you proof. Though I cannot execute that trade, but I'll show you proof why you should never do this. Let's say now market is bullish now from this loop. Now market is creating higher highs, higher lows, higher lows, higher highs, higher lows, higher highs, higher lows, higher highs, and higher lows. Now, one mistake I see people do is now your buyer says, or the market direction, overall direction now says they are bullish. Now, you first of all catch a buy, first of all catch, you first of all catch a buy trade, and the trade hits take profit. Now, because on still the same run, on still the same structure shift and the break of structure to the upside, higher highs and higher lows, maybe you find every criteria and other block entry should have. Now, what you start looking for now is you start looking for tweet ideas from here. You understand? This is I'm telling you, I'm not just speaking from it's something I'm just telling you from experience. Now, what you should never do is that's why I said SMC is all about discipline. Now, your buyer said you should buy, right? Now let's focus on the buyers. There's no point of you looking for a sell, even if the other block there keeps in line with every criteria, even if he has liquidity, he has inducements, he has other block. One thing the trend rule says is never go against the trend. Don't. Because actually now you see another block here. Market might actually react from that other block. Let me give you 30 pips move, then reverse and hit your SL. You see, the truth is, once you send me that kind of this thing and I do the analysis and say, okay, this trade is bullish, and I see that you're selling, I'll just look at it. In most cases, I don't reply. If you just show me, I'll just look at it. I'll not reply because I don't know what to tell you. Understand? Because I can't tell you. I can't come and tell you. market reacted to this, market did this, market did that. Market did not do anything. You're just the one wrong. So that's how SMC works. Once you're trading SMC, first thing that comes to your mind is looking for market direction. Now, once you're done looking for that, the second thing that comes to your mind is never trade against it. Don't go against the trend. You understand? This is how it works. Sometimes, you wake up on Monday, on Tuesday, Wednesday, you find out that Monday, Tuesday, Wednesday, I don't have a trade. I've not gotten any trade set up, or I've not even executed any trade. What comes to your mind now as a trader is, let me force one set up. You just start looking for any careless zone. Actually, lucky you, market comes back to that zone, reacts from there, move, give you that 30 pips move. If you're smart enough, you set your break even, the market comes back and hits your break even. If you set break even, you're out on stop loss. Now that's a careless loss. That stop loss, if you should show it on that, I'll tell you, the narrative behind your stop loss is just somehow, because it's actually not in line with market direction. Now, if your directional buyer says you should buy, and along the line, that buy trade hits stop loss and move. Now, once you show it to somebody, they'll say, this one is just market. Why? Because they know your analysis was in line with the market trend. You understand? So that's just basically SMC for you. One trade against trend. There's something I used to say in my on our WhatsApp group. That is where I talked about. I said, I always used to say this. I said, if my buyer says buy, if I should spot a sell setup on that buy market, no matter how the setup looks valid, one thing I'll never do is to go against that. I will not sell. Even if the team takes profit, it's fine. That is just, I'll just consider that as an retracement, of which it happens. The market moves in two ways. The market moves in an impulsive and corrective move. So definitely there will always be a retracement. But what does the trend say? They are bullish. That's why in most cases you find out that after that impulsive move, price picks a valid area or a valid point of interest. If you understand, let me use this stuff as an example. Let's take for an instance. Now, market is bullish from here. We know it's actually bullish. And maybe you want to trade a continuation entry, and you're looking at trading from this zone. Now, market has actually come back from here to do what you trace. Some persons would have taken their sales, that who sell here. Then after this move, maybe they said break even. For scalpers now, they would have taken profits. You understand? But for we day traders now, I'll take profit. We expect is for market to come here. But me, low key, I'm just watching and expecting. I'm expecting market to come from here, and market should come somewhere around here to this zone here and buy. You understand? So that's what I'm actually expecting. But now somebody that is selling now would have, if the person was not at break even or is at stop loss, market will take out his stop loss, then the trade goes according to my way. Then when I post it on my WhatsApp status, I'll be like, how come I was selling, you were buying, why were you buying? It's clear enough. The market direction says they are bullish. If the market direction says they are bearish, it's vice versa. You follow the rule. Don't trade irrespective of the quality of that buy setup on a selling market. Trade rule says don't take it. It's not advisable because you are just attracting stop loss. Though almost times you get lucky and trade plays out very, very fine. That's lucky you, like you have made profits. But now when I look at this, if I'm to look at it, I was thinking the narrative behind this is it's not clear, but market just give you that TP, enjoy. But on most occasions, it does not happen like that. It's not often. You understand? So that's just the whole idea about SMC. One thing you should never do as an SMC trader is to go against a trend. You understand? And one thing you don't do it, because I do see that mistake a lot. So say I want to take reversal entries, but it's not necessary. You understand? Where you change bias, maybe market is bullish, then you want to take when you get a clearer structure shift and a break of structure. In my July class, when I was teaching my July mentees, what I told them was a shift in market structure does not guarantee that the trade is fully moved from bullish to bearish or from bearish to bullish. The structure shift does not guarantee, you understand, that the market has moved from bullish to bearish or from bearish to bullish. It does not guarantee that. The structure shift tells you the structure shift passes is it passes an information that the market is about to. There's a difference between something is about to happen and something has already happened. That is where market structure shift comes in, or change of character, anyhow you want to call it. Understand? Change of character or market structure shift is just basically what is about to happen. Understand? Okay, when you see a structure shift, now what comes to your mind is the market is about to do what? Shift. The market is about to change from bullish to bearish or from bearish to bullish. On most occasions, you find out that somebody, or sometimes you find out that a market shifted structure, then they'll take entry from there. Market structure shift entry. Understand? So everything is intact. Then market will tag, move 30 pips, 50 pips, then reverse and hit your stop loss. Now it's not because you're wrong. You're not wrong for taking the sell trade if it was a buying market. You're not wrong. But one thing you fail to understand there is one thing you fail to understand is that for every structure, for you to know that okay, a market has fully changed structure, a break of structure must occur. Now, what are breaks? Break of structure helps you, like gives you that confidence that okay, now the market has moved from bullish to bearish or from bearish to bullish. That's why they say if you go on YouTube and you say if the market continues to break structure either to the upside or to the downside, that's a trending market. You understand? So now on most occasions it's even advisable for you to like get a double break of structure. You understand? You wait for a break of structure 1 and 2, then you now know okay, yes, this thing. But in some cases, once you get a valid break of structure, because not all break of structures are valid, there are some that are weak. You understand? So those ones don't count as break of structures too. Now on, I'll see if I can talk about them. Now, once you've gotten your break, now it gives you confirmation that okay, yes, the structure shift, the market structure shift is now valid. Now market has changed from bullish to bearish. You understand? Market has actually, what comes to your mind then is okay, yeah, now market has actually changed from bullish to bearish or from bearish to bullish. Let's take for an instance now, market has been in an uptrend for a while. You understand? Let me use this gold for an example. Market has actually been moving, you understand, bullish for a long time. You understand, creating higher highs and higher lows. Now, market created a higher high, then failed, then take out this low and failed to create another higher high. Now, at this point, now, what you say now is okay. At this point, let me use this box to mark this stuff. Then at this point now, what you say is okay, sharp. Market has shifted structure. It's clear. You're not wrong. Market has shifted structure, right? Now, this zone says market has shifted structure. So the next thing you wait for now is a break of structure. Now the break of structure comes in here. You understand? Now we've gotten a break of structure, and this break of structure is a valid one. If it's a valid one, what we're expecting now is for market to do something like this. for market to move from here, then if it according to like PY rules or entry rules, if it's mitigated, if the second pullback mitigates it, or the first pullback mitigates it, sorry, the first pullback mitigates it, then you now look at taking your entry from here. You understand? That's why I see most of the time you have a break here, your inducement is here, then you take from here. That's most of the time you notice that price will come to this zone and sell. At this point now, it's not that we don't have other blocks here. We have other blocks, but market will snub them. Market will not respect it again. Why? Because it's no longer valid. We've already gotten a break of structure to the downside and a shift. See how it works. Now, the shift signify that the market is about to. Now, the break signify that the market has changed. Now, what happened? Market will come, react to that, create the inducement liquidity, price sweeps it, then come back here and sell. Understand? It's not something that I am the one that I built the theory and say this is how it works or something like that. It's something that it's for a long time it has been happening on the chart. Now, once market shifts structure and changes, then if you're any buy setup you try looking for here, market might actually react from these zones. You understand? You feel there's another block here. Price might actually react from here. If market comes and start reacting from here, take entries from here to sell. You understand? So this is just the whole structure and the whole thing. You understand? So that's how you identify a valid change in trend. You understand? Or a change of character or a shift in structure. You understand? The initial structure was bullish. You understand? Market was actually bullish, creating higher highs and higher lows. None of it. So the market shift. Now, not only the shift, but also give you a break. You understand? Now, how do you I keep getting questions like how do you identify a valid break of structure? Now, for you to know a valid break of structure, now the candlestick that is violating this, that is actually breaking this structure. The candlestick breaking the structure, the candlestick breaking this higher lows, the candlestick breaking this lows must be an impulsive candle, more of a full body close candle. That's the same thing I taught in my July class. It must be a full body close candle. Now that candle, full body close candle, an example of a full body close candle is an engulfing candle. Now now it must be a full body. It must close below this full momentum for you to know. Now, if the close now is with a wick, the market this break now close with a wick, I won't consider that break a solid one. Understand? If it closes here, if it breaks here with a wick, it is not at that point now that break of structure is not valid. I'm not saying this because I own the market, is from my trading experience, from what I've seen. If it closes with a wick, it is not valid. It must close with a full candle like this. It must close with a full candle. I'll show you. I'll still give you guys example on normal chart. For now, I'm just explaining. The same thing is vice versa. Understand? Same thing happens to a bearish market. Market is creating lower highs and lower lows, lower highs and lower lows. Then you get this once of the break now, the candle that is breaking the structure. If it's a full body close candle, what happens is that break is now valid. You understand? Okay, now the break is valid because anything that is momentum, for tendency of price reacting to a momentum candle is it's the possibility of price reacting on the momentum candle or the momentum move is always an 80%. You know what I mean? So that guarantees you that okay, once price close like that, you can actually take your sales from here, full confidence, set your stop loss, and price hit your take profit peacefully. That's how to identify a valid break. Because sometimes online, when I see some analysis, somebody say, market created a shift and a break. Then I was waiting for price to actually react from the break of structure. Since price did not mitigate it, then it took stop loss and started flying. That's because now your shift and the shift, okay, market actually shifted structure. Now, the same thing applies to a market structure shift. The candlestick that is causing that how will I put it, that is creating the shift or the change should be a full body close candle, more like an engulfing. It should be a positive candle because possibility if market is coming back to react, you have the confidence, okay, yeah, my candle is an impulsive candle, that's an engulfing candle. It created the structure shift and it also grew structure. But once it's a week, what happens is market might actually come back or reverse, create small move like this and fly. I'm not saying that it's also possible that everything, even the candle, be an impulsive market will still disrespect it and move. Now, the reason is, like I said earlier, it might be an effect due to news or an economic key data. You understand? Like I gave what happened last week. I used the crypto market last week as an example. Understand? So people that were actually looking for buys that had cool buy setups, they were not. It's not that they don't know what they were doing. Understand? They all knew what we were doing. I also had a buy setup that took me out at break even. You understand? But when I saw price reacting to that 30 minutes fair value gap, I was like, no, my bias is still bullish. But what happened? Market took me out and started moving. So if somebody that actually sold from that 30 minutes FVG would have made cool profit. But if he had $5 and was using very he would have still flip his money. I mean cool cash. You understand? So that's just the thing. So I'm not saying that markets won't. I'm not saying that markets cannot come back and do it, but 80% of the time, market respects a good structure shift and a break of structure. 80% of the time, market respects it. Or will I say 90% of the time, market respects it. So that's just that about the whole structure shift, how you kind of identity. The same thing is vice versa. Understand? So for you to spot a valid break, that break now the candlestick that is causing the break should be a full body close candle. You understand? That's why if you I don't know, I think I've posted on my status not something that when I was talking about violation and mitigation. You understand? Violation and mitigation comes in. Don't get it so wrong. It's not a very big topic or something like it's something that is very simple. I'll see if I can actually talk about it, but that will be on the POI aspect because violation and mitigation is very solid when it comes to picking POIs. So the same thing. So that's just the thing. So the violation candle must be an impulsive candle, must be like let me use an engulfing candle. It should close below this zone. Now, not closing with a week. You see people map out week and price still like takes you out as stop loss. It's not because okay, yes, it's your setup says you should buy. But it's because why you hit stop loss on that trade is because you're picking trades from a wrong zone. Understand? So that's that about the market structure shift and the break of structure. So that's just that how you can spot a valid one. Understand? I think I'll check some other pairs. I think I should have an example on. I think I should have an example on Nasdaq. So I can't remember. I think yes, it's on Nasdaq. I have an example like this on Nasdaq. I'll still show you guys. So that's just that um about the structure shift and the break of structure. How you can identify the ones that are really valid because it's really essential. If you don't get it like this, find out that every trade you take, your bias is actually correct. You're looking for a sell trade, but you end up hitting stop losses. Why? Because the break of structure and the structure shift are not solid ones. You understand? So I'll talk about I'll talk about PUI now. So PUI, I'll still show you guys example, please. I'll still show you example, but let me just talk about PUI. So PUI is our point of interest. It's something that everybody knows. PUI simply means point of interest. Now, what are point of interest? Point of interest are like an area of high value. You understand? When you say something is a point of interest, something that has a high value, something that every day, the majority has interest in a particular thing. You understand? Now we have different point of interest. Now, the simplest point of interest of them all is order blocks. There's nobody here that won't tell me that he doesn't know how to trade an order block. Though there are some things, but we know how to identify an order block. It's cool. But I keep seeing a common mistake when it comes to breaker blocks. I see people mistaking a continuation entry for a breaker block. It's very wrong. You understand? One thing somebody I tell somebody, like, I'll see somebody and make an analysis. You just let me make out a drawing. I'm not, like I said, I'm not saying I'm perfect or something like that. I'm just trying to, like, see based on experience. You see somebody do something like this, yeah, then he will now map here as a breaker block. Then he will now be expecting price. Okay, market that's a breaker block. And this is a week. Let's just take this now for a week now. He'll be saying here is a breaker block. Then his expectation is for market to actually come back here, actually come react like this. Low key, price will do that. But what happens when market moves like this? It takes out your stop loss and start flying up. The reason is because we mistake a continuation entry for a breaker block. Understand? So, how do you identify a valid breaker block? A valid breaker block or breaker block simply means an order block that failed to hold price. You understand? It's just, let's take for an instance. During that Bitcoin, crash last week, I say we had some other blocks that were valid. And we had like some cool other blocks, of which on normal sense, what happens? Price will come there and move. But what happened? Market snubbed it, like passed it, like violated it. Understand? Now, anybody that now come back to those other blocks as breaker blocks to take trades, you see that the trade will hit take profits or win. Understand? A valid order block breaker block, before you take your breaker block as your entry, what you need to ask yourself is, this breaker block, was it an existing order block before? That's the question that should come to your mind. Okay, I want to pick a breaker block as my entry. Now I have to look at it. This is an order block. Sharp, okay, it was an order block. What happened? Market tapped it and moved a little, then came to the downside. Now, what you start looking is to take your entries from this zone, from the order block zone. You understand? Let me do it drawing and I'll show you. So let's take for an instance here. We have an order block here, and what we're expecting now is for price to actually come down to this zone, then to come and buy from here. The market actually comes here and move. Market comes here. Market will actually come to this zone, then move a little, maybe give you like 20 or 30 pips move, then come back and do something like this. At this point now, you can comfortably trade here as your breaker block. So far, it's in line with the rules. Now, we say it must be unmitigated. Your PUI must be unmitigated. That's one of the rules. Understand? So, if eventually it keeps to the rules, what happens? Markets will actually respect this zone and sell. You understand? So why? Because it was an existing order block. Just for you to know that it's an existing order block, it was a former order block. You see the market reacted to that zone, pushed a little bit, then started falling. Understand? So at that point now, the next thing that comes to your mind, the normal stuff, you look for your inducement, and what you are looking for, what you are expecting is for market to come to this zone, then sell. You understand? Sell. So that's just that. That's just that. That's also like that's also a good sign of a change of character too. You understand? So if you see market breaks at a valid order block, like you know that yes, you just seen an order block and you know that yes, this order block is a high probability order block. Price is going to actually react from it. Then all of a sudden maybe it tags you, then move 20 pips, 30 pips. If you are this trader that does 50 pips break even, then you break even, then all of a sudden you just see market reverse and start selling. You understand? At that point now, that order block failed to continue to push the price to the upside. So that's why it was reacting like that. You understand? Now there's now difference between now there's something we call continuation entry. Now continuation entry now is taking entries from a break of structure. You understand? If market breaks to the upside, one thing that should come to your mind is the market moves in two ways. The market moves in an impulsive and corrective move. You understand? That's why you notice that after a break structure, impulsive move, it will uh, come back like this, come back to somewhere like to the structure break, then move. Now at this point now, this is called a continuation entry. You see price will come back to this zone, then move up. It's a continuation entry. It's a whole thing different from a breaker block. Most of the time, people mistake it for breaker blocks. Though I'm not saying they don't, they have, if you look at it, they look similar. But other breaker blocks has the breaker blocks, looking at breaker block before taking any before like sitting and saying, I want to use this zone for a breaker block, you have to put this thing in mind. Number one, did this other block, this zone, this my breaker block, was it an existing other block? If it was, now the price reacts from it. The price reacts from that zone when it got there. If it did, then now that zone is valid for sales. You can now say, okay, market has shifted structure. Then if you get your normal break, then you wait for price to come back to that zone that it was that evaluated. Then you say, because at that point now you can say, okay, I took a breaker block entry. That was that. At that point, you say I took a breaker block entry. That's the reason for my sale. Understand? So breaker blocks are you have to when picking a breaker block, you have to treat it like something that is you have to carefully pick it. You understand? Just like the way you treat an egg. You understand? If you're holding an egg, the goal is not to let it fall because if it falls, it's going to crack and there's no way you can replace it. So that's how you treat breaker blocks. So breaker blocks are something that you need to pay close attention. You don't just pick it at random. As I say, there's a difference between a breaker block and a break of structure continuation entry. They are two different things. Now, this type of entry to continue to trend, to continue doing what? Breaking structures to the upside, breaking structures to the upside. But for a breaker block entry, is to do what? Move a market direction from a particular direction to another. It's also like a change of character. Whenever you see market disrespect and other block, what it tells you is the market has changed character. It's either the buyers are in control or the sellers are now in control. So that is just that about the breaker blocks. This is just the whole SMC idea. You understand? Not everybody will come down to like explain these things for you because they just tell you this zone is a this zone. They are two different things. I was actually making this mistake before. I was making this mistake, so that's where I was getting when I began to like understand them. I started like understanding the difference between continuation and a breaker block entry. A continuation, a break or sorry, the two has break in them, but one is the continuation and one is the change. Breaker is the change, this break of structural entry is the continuation. So that's just that about your POIs. You understand? So for the other blocks, I'll still talk about other blocks. Yeah, I'll still talk about other blocks. So this is just the two common mistake I see. Is how I differentiate this from this. You see some person mistaking or the breaker blocks from reconstruction, or you see some person mistaking uh, break of structures or breaker blocks. They are not actually breaker blocks. They are not actually breaker block. They are break of structure. You understand? Another thing, for every break of structure that the market creates, market also creates another block with it, because this is an origin. It was from this place that market actually created this structure or made this impossible. So that most of the time, market creates an order block here, and POI rule says if price does not mitigate it, you can trade from here or you trade from the other block to continue doing what, pushing the market upwards. So that's just that for a buy. Same thing vice versa for a sell market. You do that, you wait for price to actually, if the second candle reaction, which is the pullback candle, did not mitigate this break, you take it as entry. But if you mitigate it, you take your other block here as an entry. That's why for every break, another block is formed. For every break of structure and breaker, for every breaker block move, there's no other block that is formed. It's just a breaker block. It's just another block that fails to do crime. It's just like this one here now. I'm going to give an example. If markets actually came down from here, maybe did then move like this, or the next thing you see is market will come to this place, react and start selling. Sometimes it happens very fast due to at that point where the volatility in the market, sometimes due to news. You see that after market just creates one impulsive move, you start chasing. At that point, you choosing to come and take out other. When you get there, you see me start reacting, then continue pushing. So this is something that if you calm down and go back to your chart, you see that it's something that really do occur. It's something that it occurs normal. It happens. So so that's just that about the POIs. Then there are rules to picking the POI. Understand? There are rules to picking POI. And that number one rule is your POI must be unmitigated. Your POI must be unmitigated. Price has not even touched your POI. So your POI should be unmitigated. That's the first rule. Number two, your POI should have liquidity around, because when market sweeps liquidity, the next thing it looks out for is a zone it can actually tap, it can actually use to like push momentum to take it up or to take it down. So your POI should have liquidity around it. You understand? So these are the two most important, rules when picking your POI. It should be unmitigated and it should have liquidity around. Once your POI is unmitigated, price has not touched it. What happens if market will see that zone as a very good place to buy, take entries from that zone, then push markets upwards. It's just like now, I walk into a phone store and I want to buy, let's say I want to buy an iPhone 16 Pro Max, for instance. And I ask them, I want to buy an iPhone 16 Pro Max, and they bring an iPhone 16 that somebody has already used. I will not want to buy it. Even if I buy, I will not enjoy it. That's market reaction. That's the same thing that happens with POI. Now, market will come. If market see that zone is mitigated, you see sometimes price will still come and pick orders from that zone. Like price will still like react from there and move. At that point now, what you notice that after the move, it will fall back. That's for a buy scenario. It will fall back. Now that's because at that point, let me explain it like this. At that point, now the market is not enjoying what's it bought. Just like the example I gave about the phone. If you walk into a phone store and you want to buy an iPhone 16 Pro Max, for instance, if you tell me I want to buy an iPhone 16 Pro Max, if you buy the one that somebody has already used, There's a possibility that when you get home, the charging port is not good, the camera is this, the phone, because that person has already tampered with it. That's mitigation. You understand? But the situation whereby you walk into the store and the phone they are giving to you is a brand new phone, nobody has touched it. What happens when you unbox it? You move comfortably to the house and you enjoy the phone. That is how PUIs are. When market sees that a PUI is unmitigated, when price triggers there, even irrespective of the retracement candles that you see that PUI still pushes price. That's like if you are taking your entry from there, price your trade will still hit TP, and that's because the market. How will I put it down? Let me the market is enjoying what it wants. The ride is sweet. You understand? So that's just that about PUIs. These are the two rules. They must be unmitigated, and they must have liquidity. Now I will explain that liquidity part. I will explain the liquidity part. So let's sorry. So let's take for an instance. Let's take for oh my god. So let's take for an instance. Let's take for an instance now that let's take for instance, let's go back to the phone shop. So let's say we head over to the phone shop to buy the phone. You understand? Now the phone is very neat. Nobody has used the phone. Now, without the help of money, you can't get the phone. That's liquidity for you. When it comes to PUI zones, without liquidity, you see that on most occasions when there's no liquidity present at a particular PUI, what happens? Market will just either market violates it or market will just snub it and start flying. You understand? Sometimes some missed entries are just sometimes some missed entries are just how will I put it now? They are just market manipulations. They happen. You understand? Now let me use this good setup I have for an example. This particular setup right here, I had it since yesterday morning. But what the price do? I had liquidity here. Price like came to this zone, then moved. Did not tag me in. But what happened? What happened? I don't know what caused this, but at this point, I already deleted my buy limit from there. So see, though it took out the stop loss on this trade, but if I was to like if I was to like adjust my stop loss in it, the trade actually triggered and is moving in profit. You understand? So that's just basically how the PUI work. Even if you notice on some occasion, even if market has actually changed direction, you see that particular zone, price will actually come there, buy, give you maybe like 20 or 10 pips, depending on your exit point. And you take profit and you leave. You understand? So I'll not be surprised if I wake up on Monday and this trade head over to TP. Because aside the fact that I took out my stop loss, I know this, I don't know what caused this reaction, but let's just put this one as maybe a key event or an economic, a fundamental key event that happened that made price to actually take. Because when I saw this kind of move from here, I knew that something is actually wrong by the way. So that's just that about PUIs. So that's just PUIs. I gave the full store as an example. That's how PUIs work. Once your PUI is mitigated, once your PUI is mitigated, price will not come for it. Even if price comes to it, price will just react then hit it with stop loss. You understand? And like I used to say, every technicals that you are doing, make sure that it's in line with your market bias. You understand the market trend. So once you're able to find the market trend, until you're doing, you see that majority of the time, or most of the time, your trade will always go to TP. You might, if GBPUSD is bullish, for an instance, GBPUSD is bullish, you can actually, GBPUSD is bullish. If you have like buy setup, if you have like 5 buy setup, maybe one might hit herself, but you're sure of that 4 playing out. Why? Because Direction says we should buy, and you didn't get any structure shift or another block that was violated or something like that. Price will actually still play out fine. So let's get back to the stuff I talked about earlier. I think this class I'm going to continue it tomorrow. I have to continue tomorrow, although I have on that one with somebody, but I have to beg him so that I can continue because there are a lot of things I want to talk about. I would love to, but it's already getting late. So now let's talk about I talked about shifts, break, and I also talked about the POI. I'm going to talk about how you can identify a valid point of interest. So still online, you can still with me. So I will explain. I want to use good and explain. Let me get to let me look for I'll to use Nasdaq for an example. Yeah, I think I'll to use Nasdaq for a clearer example or something like that. I want to really talk about this market structure shifts. So market structure shift. I don't really understand. Coming. That should this setup actually happened on the manual time. Something like that. Okay, sure. So I was talking about market structure shifts. Now let me show you the reason why I took this sell trade. This sell trade I took it when I think that should be around I'm not mistaken. I think that was after I think when I go missing. I was like August. I was when I took this trade. So if you notice now, if you notice for a very long time, market has been up, market has been getting higher highs and higher lows, moving like without sending anybody, like it's obvious. Market has been moved, yeah. Then create this move. Then all of a sudden, what happened? Failed to create another high. Took out this low. Now we already have the structure shift to the downside. Though I did not map out the break of structure, but I'll map it out for you now so that you see. So now what happened? Market actually broke structure from here. Market actually broke structure from here. Now, if you see the reason why these cells held was because now the the candle that let me make it bigger. The candle that violated or that caused this market structure shift was a full body close candle, an engulfing candle. Understand? I used to feel that once we hear SMC, mostly SLP, structural liquidity, PY, we neglect we neglect how will I put it, the candlesticks, what they represent, until every SMC trader pays close attention to engulfing candle. That's you see that candle alone, that candle can make you $10,000. It can flip your money from $5, from $10 to a reasonable amount. That candle alone is a signal for you that sharp. What I'm doing, my analysis is falling in place. Understand? Market is playing along. Now, if you notice now the break of structure to the downside, what happened? Market did what? Broke structure with what? A body close candle. See it. The momentum, the aura is a full body close candle. Let me use that. Understand? See the impulsive. It didn't close as if it had closed. See the way it closed below here, it closed with a wick. If that's the way it closed above here, this zone, that this trade wouldn't have played out. Now, to show that okay, this was actually a selling market, maybe some persons would have actually had a buying this one because they say, oh, we have another block here. Yeah, you had another block, is good, but what happened? Price reacted to it, moved, then broke that zone. Now that was where the idea of this sell came in. Now what happened? Now you see this thing, the breaker block. Now this is where breaker blocks come in. Now you've gotten your shift, you've gotten your break. Now let me even show you to show that those zones were so valid that when price got to those zones, price reacted. Now look at this. Let's take this for an instance. So basically, if I had wanted to actually sell from here, if I wanted to sell from here, if I wanted to sell from here, if I wanted to sell from this zone, right? If I wanted to sell from here, I would have still been in profits. Like the trade is actually moving. You understand? That means my first entry will be in profit, and the second one still moving in profit. This is it. Let's say I took this trade now. You notice that they break due to the candle. When price got there, it reacted. The same thing happened here. Now this way your breaker block comes in. You see, when price got there, price reacted. Why? Because the candlestick violation, the candlestick that violated this was an impulsive candle, and this is the impulsive candle. This black candle here. This is the impulsive candle. This one. Now what happened when market got there? It sold and hit my TP. Now the market structure shift that closed with the same impulsive candle, which is an engulfing candle. What happened when markets got? I missed this trade. This one, for if you see it like this, I missed it. Now what happened? What happened when market got to this place? Market tagged and started selling. You understand? Market started selling from that zone. So it means if I'm taking sales from here and I'm taking sales from here and I exited here, I would have still made profits. So that's just the essence of that candle. Now, if these candles are not closed like this, you will see price reacting the way they reacted from zones, because they are very, very, very valid zones. Now let me move down to 30 minutes time frame and let me look for that same trade. I want to explain something. No, it's not here. I want to explain something. Think that my sell entry was coming from 30 minutes or 15 minutes. I can't remember. Let me check 45 minutes, something like that. Check 15 minutes. But everything was just falling in place. Why? Because those zones were actually valid or something like that. Okay, this one was like a fair value gap entry. Okay, this one is a fair value gap entry. But let's talking about the zones. You understand? So you see that when price got to these zones, they reacted. Even this here, this on the 1 hour time frame. You see this candle. This is your engulfing candle. What happened when I saw this? I took my entry from here and I got TP ASAP. So that's just the whole idea. That means if I had actually taken entries from this zone, from the shift, I'd have still made profit. Why? Because my break was a valid one and my breaker block was also a valid one. And you see that price came. Now that is where violation comes in. That's why I used to talk, understand violation and mitigation. It helps your POI. It helps you decide the kind of POI you take. It helps you spot out high probability POI. Now, after the first candle that violates a zone or creates a break of structure, or the candle that forms or that creates a breaker block or that forms a breaker block. Now that's your violation candle, which is this candle. Now your violation candle is this candle, the candle that caused or the candle that created the break or the breaker block. You understand? Now when it comes to mitigation candle, mitigation is very, very cool. Your mitigation candle is your inducement candle, the candle that forms your inducement liquidity. Now, once the violation candle is in line with the rules, which says it must be a full body closed candle, must be an engulfing candle. If it's an engulfing candle and it keeps to the rule, okay, yes, our violation candle is intact. The next thing that comes to your mind is your mitigation candle. You see, the second candle that that starts reacting, or the market creates after the violation candle is called your mitigation candle. Now, is that candle that forms your inducement liquidity. Now, if that candle does not mitigate your POI, is your mitigation candle. If it does not mitigate, if it does not mitigate your point of interest, if it does not mitigate your point of interest, then your point of interest is very, very valid for entry. Now, if you notice, the candle did not mitigate. You understand? The candle did not mitigate. Now, what happened when price came here? Price successfully did what? Took my sell limit and TP limit. You understand? So that's just that. It's a very simple. It's a very simple something. First of all, you pay close attention to the violation candle. Now that candle would help you. You understand? Because I feel like most SMC traders feel it's all about SLP, structural liquidity, and POI. And most like not mitigated. It's not all about it not being mitigated. Now the violation candle. What I'm stressing more on breakout blocks or break of structural entry is because these things tend to happen. It tends to happen because breakout block is a violation. Breakout block is a violation setup. You know that, okay, yes, is my violation candle a full body close candle? If the answer is yes, then the mitigation candle did mitigate the zone. No, it did not mitigate it, which is our inducement liquidity. Then you set your limit and price respects your trade. You hit take profit and you're cool, you're feeling like a big guy. Why? Because everything fell in place. It's not because you know that the market will react. It's because to your technical analysis, everything was intact. So that's why it is. Let me use BTC as an example. I also have Sharp. I like this. Let me use this BTC trade. I think if you're on Telegram, if you're on my Telegram channel, you have seen when I posted this trade. Now let me explain, because I kept getting questions like, how did I know that market was actually going to come back to this zone and react then buy? Now, if you notice now, I mapped it as a breaker block. Now, here was supposed to be an order block that would do what? Hold price to sell. Why? Because see, we already had a break. Everything was intact. I posted the signal. I posted this sell signal. What happened? Because from the previous week before this buy move, I was actually bearish on BTC. Understand? So you can see the market was actually, I caught this first setup, this second setup, price did not tag me in. Understand? So now when I posted this trade, it triggered, it moved, then did what? Hit SL. Then I posted it on Telegram. I said buyers has already changed. So that was around 5 a.m. or 4 a.m. or thereabouts. I dropped this buy signal, and markets played. Did not just only stop there, started moving, started flying until we had this crash that happened, the last crash. Even after the zone where price was reacting. So if I was actually selling for that zone, I made money. But let's not go back to that. That's what we are talking about. So you notice that now, why did I give out this trade and what did I see? Now let me just give you guys a cheat code. Now, when I saw that market hit my stop loss, I looked at the candle, the violation candle. Then I saw it was an impulsive candle. It was a full body close candle, which is an engulfing candle. Now, this our second candle reaction is this candle. I mapped it here as because everything here together, all this reaction is still the same, is still one. You understand? So did not mitigate this zone. What happened? Markets came back, tagged in, reacted from there. If you notice, it did not stress the stop loss. So that's why when I posted, I said buy at CMP. Markets moved and we got TP hits on this trade. Now that's to show you that yes, the setup was very, very valid. Now the breaker block was valid. Why? Because our full body close candlestick, the violation candle was a full body close candle, which is was an engulfing candle. And our second candle reaction, which is our inducement candle, or which is the pullback candle, which is also the mitigation candle, did not mitigate our breaker block. You understand? Did not mitigate our block. That's when price came here, price moved. Why? Because market was about to shoot up to 126k, and it was looking like for a very clean area to buy from. That's where we had this. So which means if I was actually holding this trade, or anybody that executed this trade on a $10 account with 0.05 and is holding, you understand, would have made cool profit. Maybe putting, imagine buying at, I think the trade was sorry, the entry was 111. So imagine buying from 111 to 126. You do the math and you know how you see the money there. So this is another example. You understand? This is another example of very good breaker block. Just pay close attention to the violation candle. Just pay close attention to the violation candle. I think I've got more example. I want to show you guys more example. You understand? Then after that, we'll keep the rest things for tomorrow. Definitely, I'll hold this class tomorrow, and there's nothing that is stopping it. I can't put it on Sunday because it might not hold. Sundays I'm always very, very busy. So let me look for setups on past setups on Euro USD that have faded. You understand? So this is another block. Tomorrow we'll talk about other blocks. There are some things I want to talk about. I have reasons why I'm treating breaker blocks this night. I have reasons why I'm treating breaker blocks. Let me come in. Let me check. I think I should have like setups, like previous setup. I can't find them. Okay, sharp. I think I've gotten one right here. Sharp. So now this is a very good trade. This is a very good trade. Now this is, if you notice, when I did the analysis, I mapped it out as an order block. If you pay close attention now, this thing now, I'm telling you the truth, but if you implement this, you see results. It's not all about the structural liquidity and PY. It's not all about the POI stuff. These things are things you pick. These things are, now your POI is not mitigated. Yeah, we understand, but this thing alone should give this violation count. That's why I used to post on my. There was one time I made a post on my status where I said, if you understand violation and mitigation, it's very difficult for you to take stop losses. You can take 3 trades, and that 3 trades you have win. Even if you have stop loss, might be only one. Understand? I'm not saying 3 can hit SL, but I'm just telling you that this is the pattern I've been trading. And sometimes you have to wait for this. You have to apply patience because it does not just form like that. It don't form like that. I'll still give you an example. Now, if you notice now, I mapped it out as an order block. Why? Because my expectation was for price to come here. So when price tags me in, price reacted. I got a notification from my broker that price has already triggered. I was like, okay, wow, what happened? The next I see is stop loss. Then I now came back to the chart and I saw this. Then I was like, okay, sharp. Now we are no longer bearish. What we are now going to look out for now is a buying market. What happened? Now, this is our violation candle. Look at it very well. This is the violation candle. What happened is a full body close candle, an impulsive move candle. Now, this is the violation candle. Why? Because it's the candle that violated this other block that made it a breaker block. Now, our second candle reaction, which is our inducement candle or our mitigation candle. I mean, I put them as violation and mitigation because the candle violates, the other one mitigates. So now it did not mitigate this zone. What happened when price did this? Price came back to this zone, then boom, bought, and I took TP here. So it was a very sweet trade. My stop loss was not disturbed. It's a trade that gives you peace of mind. Once you see it, irrespective of the correction move that market made, you're still holding your trade. to full TP. Why? Because your technical analysis is balanced. You're seeing this, okay, it's very, very balanced. On the normal ground, on the normal market move, this other block should sell, but price did not actually hold. Market could not hold, like this other block could not push price down. Reasons I don't know. So what I saw was this. Then I took entries from here and I bought. At that point, I hit TP. Then started looking, was scouting for more pairs. Now, if you notice now, after that move, we had a retracement in price came to buy around here. I don't know. This sale was not actually clear to me though. So you see, market started buying. Market bought that week. So you see, buying Euro USD then was actually a cool idea. You understand? So if at all if anybody had gotten entries from in this period, maybe on lower time frame like 15 minutes, maybe you get it like continuation entry, that's break entries, or other blocks. You understand? So that's the same thing that happens here. If you pay close attention. This one is a break continuation. I marked it as an other blocks in my life. So this is a continuation entry. You understand? This is a continuation entry from the previous week before this. Now, what happened was this violation, second candle reaction, which is the mitigation candle, did not mitigate. What happened? Price came, tagged in, and moved. You understand? So all of them is just basically the same. It's just basically the same. I think I should have setups for Euro USD that I took for. Now let me explain. Let me explain. Now this is a continuation entry. Yes, this one is a continuation entry. This is a continuation entry. Yes, very well. Now, if you notice, after market triggered an order block from this particular setup, market created this break here, or let me use this one as an example. Now, market created a break of structure to the upside. Now, pay close attention to the candle. This is a full candle. This candle is a full candle. Now, what happened? Market did what? Came back, and the second candle reaction did not mitigate, which is the pullback candle, which is the mitigation candle. I took TP successfully here. Now the same thing happened here. This is a full candle. It should not close below the break. It should close above the full body. Now what happened? After market made all this move, after market made all this move, what happened? Market came finally tagged and did not hesitate. My stop loss was intact. Did not even come for my stop loss, and TP hit. So that's just the whole idea. That is the whole idea behind it. That is the whole idea. So that's just that. Let me see if I'm going to see one last setup and one last example. Then we'll go. I think I should have that on gold. On gold. Yeah, it happened on gold too. Let me look for it. I think that setup, I was not so sure that gold was going to hit $4,000. If I would have held that trade. I would have personally held that trade, but I was like, let me just let it slide. I think I should have that set up around here. Yes, this is it. This is it. Now, if you pay close attention to this trade, you discover that here we had an order block that price was supposed to sell from. What happened? Market came, tagged it, then moved down. Here also, if you move down to the 15 minutes time frame, you find out that here also is an order block. That's why I say I mapped it out like this. Then we had our liquidity. I was talking about our liquidity did not mitigate this pullback did not mitigate this zone. What happened when price got there? Price did not even react. It closed with a full body close candle. Now, when I saw this, I waited for second candle reaction, did not mitigate. I waited for and now set my limit at that zone. Waited for price. Price tagged me in and moved peacefully. The same thing happened here. Sorry. The same thing happened. The same thing happened here. See, look at this candle, full body close candle. The second candle reaction did not mitigate this zone. That's why when price came, it tagged with sniper and it kept moving. Now, the same thing applied to this trade, but we just had missed entry. This one was just a missed entry, but regardless. So imagine if I was still holding this trade. I imagine I bought from here. I think that should be like $3,300 something dollars. I'm still holding. And the trade hits full take profits. I'd have actually like made some cool cash. So what I'm trying to say is I'm just trying to give you an example that if you spot this type of stuff, it works on all pairs. It works on all pairs. And remember, I'm coming. I think I should have that on. I think some pairs that I don't frequently treat like that. Pairs that I don't used to look inside, look at them, just to even give them face. I think I should have set up like that on NZUSD. I don't know if I can still find it. That one too, I just want to show you guys an example. That one too is a clearer setup. I don't know if I can still find it. Or not. It's not even here, safe. Let me check for it on the other program. I forgot where I actually did the technical analysis of that too. Okay, see, sharp. This is it. This is just it. Okay. This is now this. Let me go back. Let me go to 2-hour time frame so that it should be more clear. Now, if you notice, this is a breaker block entry. Has to show you guys that everything I've been saying is the same rule I apply to my trading. It's the same thing. Anything I say here is not something I do. I don't do the opposite. The same thing I apply. Now, I saw this other block on the 2-hour time frame. It was looking good. I like the normal. This other block. I think I took this trade actually. But what happened? You see, everything was intact. What happened when market came down? They reacted from there. They did what? Violated the other block with a full body close candle. I say it with a full body close candle. Then at that point, I knew that okay, Josh. I told myself, Josh, instead of buying again, look for sales around this zone and sell. So what happened? I looked for my second candle reaction did not mitigate that zone. I waited for price patiently to come to my entry. When price came to my entry, it did not stress my stop loss. What happened? TP hit peacefully. TP just hit peacefully. So that's just the same thing I was explaining. Pay close attention to the violation candle, the candle that violated the other block, changing it to a breaker block, or the candle that's creating the break of structure, or the candle that forms the break of structure. You pay close attention to it. Now, once it's a full body close candle, the second candle, you pay close attention now. It's the second candle reaction, which is your mitigation candle. If that candle does not mitigate that your POI, the next thing you do is to set your limits. So imagine when I took this trade, it was actually cool. You understand? Because I did crazy flip with this trade. So that was there when I changed when I was actually looking at NZD then. So I think I'm no longer an NZD fan. This is I don't know. Understand? So if you notice now, I think this one is I don't know why I marked this as a breakout block entry, but I think this is a market structure shift trade where I thought this market was actually moving in, broke market structure shift, break of structure, the break was mitigated. That's why price came. Now everything, if you notice, is a full body close candle. That is why I had the confidence that price was actually going to buy from here. Even if market was still bearish. You understand? If you notice, now take a look at this zone. This is a break of structure entry. This is not a breakout block. This is a break continuation entry. What happened? The candlestick that violated it was a full body close candle. It was a full body close candle. You understand? Now, what we're expecting now is for price to come to that zone and buy. What happened? Market came, reacted. It's the same thing happened here. Full body close, second candle reaction did not mitigate. Price did anti-pivot. So that's one aside. Let's just leave aside the buy setup. Let's look at the three sell setup. 1, 2, 3 was a full TP hit trade. Imagine you had this type of 3 TP hit trade in a week on your account. You have made cool money. Now I hear somebody say, it's how do I know that my setup will go to get to full TP? These are the criteria. It's not all about doing the other block. These things come hand in hand because we feel to pay close attention. Everything here you see I used was the same thing. I didn't just wake up one morning and I saw one setup and I say, okay, sharp, I'm going to take the setup, I'm going to do this. No, it's because everything is just based on the same logic. Everything is how I trade. It's just based on that. Okay, I look at the valuation candle is the full body close candle. So what we're expecting is for price to actually come to this one and actually do what sell. So that's just the whole idea. But on most occasions, most persons fail to understand this. It happens on all pair. There's no pair that is exempt pair. I'm coming. There's no pair that is exempt pair. It works on all. I'll still show you a steady setup too. I'm not saying I don't hit stop loss. I don't hit stop loss. I hit stop loss just like everybody because look my papa get this market. I'm always to just after Josh do your technicals and make money, cash out, nothing much. So all of them are just basically the same idea, nothing much. I don't do anything other than this. I think yeah, this one is an other block entry. This one is an other block entry. This is an other block entry. This one is key level. So that's not what I'm talking of now. I want to look for previous setups that on USD JPY that previous setup on USD JPY actually has this kind of stuff. So if you pay close attention to this, if you follow this, just go and do your back testing. Just go and back test. You find out that it's true because it's not all about. That's why I said. That's why sometimes I make a post on my things. I said SMC is not all about the structural leading. It's far beyond that. And if you don't pay good attention, if I not told some of you these things, some of you might have known, but you don't know about this. Some of them might be like, so this kind of thing, it does. It does. It's just that we neglect it. See, after learning SMC for a while, I was taking trades and I was hitting stop losses back to back. Like I was an SMC trader, but I was having like a week full of stop losses. I can have like 4 stop losses and 1 SL and 1 TP. But to me, it did not make sense until when I was studying my chart, then I started discovering these things. I was like, wow, these are things you need to put in place for you to like actually get a good trade. So my POI must have this. It's not all about my POI having liquidity on it. The violation candle and mitigation candle. Did they work hand in hand? The rules, did they go according to the rules? Sharp. This is a buy trade. You understand? So you say this is actually a buy trade. Let me look for past USD JPY. So I'll still show you on all pairs some pairs I think I've traded. Understand? So that you see for yourself that it's not just I think that was not I don't think I was USD JPY low bound. I was not the USD JPY low bound from the onset. Let me see. I think I should see. Hopefully. Uh, let me let me use this one as an example. The reason why this trade don't you understand, but let me just give it. So notice from the previous week we're actually bullish on this trade. I will explain this one. I'll still use this one as an example. But what happened? Yeah, I think this trade was from 1 hour time frame. Let me see if I'll still see it on 1 hour time frame. That was a crazy stop loss. Now, if you pay close attention to this trade, we had a break to the upside, or should I say a shift to the upside? Let me just say a shift to the upside or a break anyway. So now, if you pay close attention to this, the same rule, the candle was a full body close candle. If you pay close attention to it, was a full body close candle. Second candle reaction did not do what? Mitigate the zone. The second candle reaction, these two candles, they work hand in hand. There are two candles that can change, can flip your $10 to $100. Because once you see the setup, you know that yes, sharp. And now you don't just see the setup. First of all, you make sure that okay, it's in line with market direction, my directional bias. Once it's in line, sharp, everywhere good. Now you wait for what I did was to wait for price to come back to this zone. See, I had the violation candle was a full body close candle. The second candle reaction, which is my mitigation candle, did not. Then I moved. I had my inducement and on some stuff like that. Then I moved. Now everything was in line with the market direction, and I bought TP. Like I said, irrespective of the pullback, your trade will actually hit TP. You see, when markets moved there, it came back. I did what? Went back to my TP. TP hit full trade. You understand? So that's just the thing. That's just the thing. That's just the thing. So I think this zone too. This was an order blow, was a failed order blow that closed with the full body close candle, because we see these rejections from here because price actually, when markets got here, market actually triggered from that zone. So what happened? Market violated with full body close candle. Second candle reaction did not mitigate it. That's why I set my entry from that zone. I got TP hits. So that's just it basically. So the same, I'll still show you guys on US 13 and on the day. Remember, it's almost I have 8 minutes to 11. Guys, sorry if I was not expecting to stay this long. So the same thing happened here. I had a full body close candle. Second candle reaction did not mitigate. It's not something that I just do. The second candle reaction did not mitigate all the price. The price came, tapped me, successfully moved. Irrespective of the correction move or the corrective move, you notice what price? The price still came back to my entry. But when I saw this, I almost hesitated the trade. I didn't break even on this trade because all my mind was the trade. Since the trend has gotten to this point, TP. I did sign up for this kind of move. What happened? Price just tagged me in. Came back to my entry and moved. My stop loss was still intact. It moved and it got to TP. Now pay close attention to this. This is a break. Full body close candle. Second candle reaction did not mitigate. What happened? Price came and moved. All these are still under SMC. All these are still under SMC. I think this one is an order block entry. Yeah. It's order block. This setup was, I didn't take this trade. I didn't take that trade. You take that trade. This one is order block. Tomorrow we'll talk about other blocks. There are some stuff I want to talk about other blocks too. Because other blocks too, they still have violations, kind of stuff. So that's for that. So I would look at US 30s. We know I traded US 30 and holiday. Night, yes, 30, yes, 30, yes, 30. And I really miss this guy. I really miss this guy, but this guy didn't 30. This guy didn't 30. I'm not gonna lie. Now, if you pay close attention to this is a full body close candle. Second candle reaction did not mitigate. What the price do? Price came down, tagged me in, and moved. Came back again. This was new, so see this move. Yeah, was news. Came back, tagged me in again. My stop loss was still intact, and I got to full TP. So all of them is not something that maybe I just came out from one bush and start like doing this other block. I don't talk about other blocks. I want to talk about stuff that are actually cool. This one, I didn't take this trade because I was not on the market. But if you look at it, and we had a break entry. You understand? Since we had a break entry here, though if it was based on my trading pattern, this trade would have taken me out, maybe as a result of news or something like that. So I think that price actually moves. So let's just put it on the reasons that if market actually had tagged this without this move, would have still made profits and take a TP. You understand? So I'm just trying to say that it actually works. It actually works. Okay, this is another block. I don't want to talk about other blocks. I said I don't want to talk about other blocks. Now, this is another block. I don't want to talk about other blocks. I just want to talk about break. I know I've been a US 30 guy for a very long time. Now, this setup, you see this particular setup was one of the most stupid analysis I ever did and I executed. When I took this trade, I didn't have peace of mind. Because on the normal, this is not a setup. It don't even follow. Why? Because now the other block zone was violated, full body close candle, or it's still the same thing. Yes, it's still the same thing. It's now I'm even noticing it. Now, if you pay close attention to this now, pay close attention to this. Wow. I see I didn't know and I waited for price to actually come back to that zone. Like as if I knew. If you pay close attention to this, right? You find out that this was an order block zone. And what did the price do? Price reacted from it, which means this was an existing order block. Price reacted from it. Then what happened? Market violated it. Now this is the violation candle. This candle right here. Now second candle reaction is not mistake. That's why this candle reacted from it. Understand? So this entry, let me unlock this. Let me move this to here. So which means that if basically I was taking this trade from here, the trade is still actually a TP trade. Why? Because the second the retracement came back to my entry and still sold. That's to show the validity of this trade. Understand? So that's just that about how you pick your point of interest. Once you're able to do this, your point of interest, see your point of interest will keep your point of interest will just keep it will keep respecting your this thing. Now this is an order block. I don't want to talk about order block. Now this is a break of structure continuation. The price is not tagging. Now full body close. Second candle reaction did not mitigate. This is our mitigation candle. TP hit. So imagine price attacked me from this way, but from this place to this place was still actually a good profit. So that's just that about that. So the same thing applies to this. So this was a buy market. This is an order block. I don't want to talk about order block. We're talking about order block. Now, this is a break. No, I didn't take this trade. No, I didn't do analysis there. Now, look at this. Pay close attention to this trade, right? See this trade now. Wow. See where market was reacting. Market had a fair value gap here. So what I was expecting now was for price to actually come down to this zone, then sell from here. But what happened? Market closed with a full, but the second candle reaction did not mitigate. That's why I took my entry from here. That's why I see TP hit. You understand? This rest one is, I think this one is another block from this zone. I was expecting a buy from here. That's another block. So I don't talk about tomorrow. We'll talk about other blocks. Now, if you pay close attention to this, now where my TP is here, I don't know if I draw any line. I didn't draw any line. Where my TP is here, you understand, was a break zone. You understand? So when I was expecting price to go down, price to go back, because second candle reaction did not hit. Price clear that we had a fair value gap here. So price came back down here, tagged me in, and moved in profits. You understand? Then who know then? Because I've done some analysis that I can't even find their setup. Can't even find their setup. Can't find their setup. Okay. So that's just that about the whole thing. If you keep everything, if you keep everything, if you keep everything simple, if you just follow these rules, these things I just said here, if you follow it, you will it's very difficult to take some careless loss. It will be very hard. Let me go back to our time. Now, let me use this setup as an example. Now, if you pay close attention, down this was a break, a full body close. Look at it, a full body close. Wow, second candle reaction did not mitigate. What happened? Price came back here, tagged me in, came back, retested that zone, and moved to TP. So that's just it. I see these are the same rules I pay close attention to whenever I want to pick a trade. Now this is a break continuation entry. You understand? So it's just that okay, yeah. So price tagged it in. I think I had this set up. I think it's still in my junk files. So where price actually came, tagged and moved. I think I should have some of those stuff on my Telegram. Let me see if I can actually like locate some of them. Let me go to my junk file and see if I can see some. I don't know where I can see this. Let me look for some. Now this was the BTC before. This was that BTC I talked about. This was the before the full TP stuff like that. So this was volatility 100. This trade actually played out. This trade actually played out for synthetic stuff. I'm not actually being so active, but that's now. This is GBP CHF. I'm not mistaken. The rules were intact. I saw what I saw, and I got stop loss hit as a result of news. You understand? So that's just that about that. That's just that about that. So there's a particular trade. There's a particular trade I want to show you guys. Where I had this thing. Where I had if I can find it again. Okay, this was that Euro USD I showed you before, right? I mean, no, this is this is NASDAQ exactly. This I wanted to show you guys this setup. So if you pay close attention now, here they had a break to the upside. If you notice, full body close candle, second candle reaction not mitigated. I waited patiently for price to come. It just took me out as sniper and TP hit. So the same thing happened here. See this full body close candle, second candle reaction did not mitigate. I waited for price to tag me here and move. This was Bitcoin. See, market tagged me here, full body close candles, second candle reaction did not mitigate. Market tagged me and full TP hit. So it's basically the kind of it's just something I've been trading for a while. Break, full body close candle, second candle reaction, not mitigate, tags and TP hit. I think this was Bitcoin also. Now this is that US oil I was showing you guys. This is the before, this is it before and after. This trade actually took TP. So you see, it's just basically the same pattern. All you need to do is to put them in practice. Take a look at this. Break, full body close candle, second candle reaction did not mitigate, price came, tagged and moved. This is Euro USD. I just want to show you guys something. Now this is NZD USD. Break, full body close, second candle reaction did not mitigate, and price started reacting. So it's a full TP hit trade. So if you pay close attention to it, you know that yes, that's the same pattern of setup I use every single time. Now, candle reaction. This is BTC and TP on the trade is the after the trade. So it's just basically the same thing. Pay close attention to this. Full body close break. Second candle reaction did not mitigate. Price started and moved. I took TP on this trade. This is another block. I'm not talking about other blocks. I'm not talking about other blocks today. I am definitely not talking about other blocks. I'm not talking about other. Let me see. This. Okay, this is another block. This is another block. Now, that is BTC. If you're on my WhatsApp group, I posted this BTC. That should be quoting with date. This is BTC. BTC was at 90 something, I think 91K. So I saw this full body close candle, second candle reaction did not mitigate. Waited for price patiently to come to our entry, of which he successfully did, and this is the outcome of the trade. Once these things are intact, market does not have any business with your stop loss. It's just I gave an example of whereby you walk into a phone store. Now let me tell you the reason why market goes for POIs that are unmitigated, and the violation candle is like full body close. Now, I gave an example of you walking into a phone store and telling them you want to buy a new phone, an iPhone 16 Pro Max. Now, if they give you an iPhone 16 Pro Max that somebody has already used, you won't be happy using the phone. It's natural. You will not be happy. Why? Because the phone is not brand new. But if you go and buy that phone brand new, you'll be very happy. You feel relaxed, comfortable. You understand that you're using the phone. So that's just the essence of the whole idea behind the setup. You understand? Now the reason why market does not come for POIs that are not bad, so that does not have all these or that are not new. Understand? Let me just say the reason why market does not buy from old POIs is number one, they are mitigated. Now let's take for an instance now. The reason why let me go back to the phone store. Now, if you buy a used phone and along the line, police, unknown to you that police is tracking the phone and they find it on your hand, what do you want to explain to the police that you bought it from somebody? You that they saw the phone on the hand is you the call the suspect, or you're the one that stole the phone. So that's why market does not, that's why you see market going for POIs that has been mitigated. It will just disrespect. If you have any setup there to disrespect it will not respect it. So that's just the whole idea. So that's just how I basically trade. See this AUDJPY, full body close, second cardio reaction did not mitigate, waited patiently, but I got the worst day of my life. I had a missed entry. So if price had actually like tagged me in, it would have been a full TP trade. So this is just the whole idea of the trade, right? So that's just that for that. The same thing is what I apply here. Break, full body close, second candle reaction did not mitigate. Market came. Even when market opened, boom, we went to TP. That's because it's a very clean zone that market will always buy from. It does not form every time. It's not, how will I put it now? It don't form like every time. It don't form like that. But once it forms, this okay. Now this is GBP USD. I'm sorry, BTC. Yeah, this is BTC. Now a break, full body close, second candle reaction did not mitigate. I shared this setup on our WhatsApp group. What happened? Market started reacting from it. You see, market moved. You see, full TP hit. So it's not magic. It's just the same approach on something like that. I think this is a break continuation entry. The reason why I took this is when markets open, markets created a gap here, and that gap is like an impulsive. Understand? So second candle reaction did not mitigate. That's why I put my entry from here and see price triggered and moved in TP. So sometimes gaps to happen, but that's another story from Daddy. So this is US 30. This zone was an other block zone. I mapped it with the line. You see price reacted from it, broke. Second candle reaction did not mitigate. That's why you are seeing this. This was the initial trade. So the trade actually played out. So that's just that. That's just that. There's nothing new. No, this trade I got stopped out on this trade. Okay, this is GBP. Sorry, this is GBP USD. Now this is GBP USD. This is the whole analysis, right? This is the before. So market started happening. Now let me go back to the first picture. I had a full body close. Second candle reaction did not mitigate. That is why I took the trade. SMC rules. The mitigation did not happen. The violation was strong, and I waited for price to actually move. And this is what happened. This is what happened. So you can see the trade actually hit full TP. It's just that I didn't save the full TP part, but that trade played out fine. So if you have if these things are intact, I think this is Pi USDT. I shared with Kelvin. This trade actually played out, so I don't know where I kept the before after the trade. This is NZD full body close candle, second candle reaction, market came, bam, right? So this is all this is I'm showing you just proof that that's just a particular system I've been using for a while. So it's not that Josh knows the market, it's because I just understand some things. You understand? This is an example that it was when this trade hit stop loss. I was now asking myself, why did the trade hit stop loss? Then I discovered that everything was intact. The second candle reaction here did not mitigate this. But what happened? See, when price, if you pay close attention to the way the stop loss hit, when price got here, you see it reacted, they hit stop loss. It was then I knew that that was on Sundays. As I said, as I told myself, I will never trade on cryptos on Sundays again. So that's just the whole idea. I think this is US 30. Yes. US 30. See this break, full body close. Second candle reaction did not mitigate. Price tagged at TP hit. Full TP. So it's just the same particular stuff I've been using. XAUUSD did not mitigate. Price tagged and TP hit. So it's just the same. It's just the same pattern. I didn't change anything. I didn't change anything. So I didn't literally change anything or something like that. I didn't change anything. Nothing changed. Nothing changed. Let me see if I'll see more set. Okay, I don't have again. So that's just that about that. And why is my screen acting? So